Hey there, traders! That little bug just isn't going away, is it? As we all maintain our 6-foot distance and sanitize virtually everything we touch, cases are still on the rise. And this keeps pushing the economic health further and further into a recession. What do traders need to watch out for this week? It's all right here on this week's Trade Wiki Weekly Forecast. To start the week of trading, stock indexes made big jumps to compensate for last week's massive sell-offs, which were influenced by the climbing rate of unemployment claims in the US. The Dow rallied up to 1,100 points to start the week off, which was prompted by the possibility of reduced coronavirus deaths, especially in New York. The Big Apple is unfortunately still one of the worst hit spots in the nation. Not only that, but fatalities in Europe have diminished as well, leading to overall market positivity. Could the worst be behind us? Not so fast there. Stock markets, even though they haven't quite hit rock bottom, still have a ways to go before they reach any kind of stability. As more and more states implement social distancing and non-essential business closures, GDP growth is set to continue stagnating, implying that economic recovery is far from close. Traders coming into the second quarter need to look at new GDP data releases. They're an indicator of just how slowed and drawn out economic incline will be. So, while these market gains can yield quick profit, in the long term, it's never been more uncertain. That's all for today, traders. Stay safe out there, and I'll catch you later in this week's market recap. This is TradeWiki, your one source for trading tips, strategies, and guides. Download this episode's guide by clicking on the description below. For more, make sure to like this video and subscribe to our channel. Hit the bell button to get notified of our latest upload, and we'll see you in the next one.